I'm Aftab Patel, Chief Executive Officer of Alumania Financial Services. It's my pleasure to welcome you all to this presentation and to the MSX discussion session. We'll take you through briefly. We'll be pleased to take any questions, queries, clarifications that you may have. And thank you very much for being here. Take on to the next slide, please. So this is briefly the agenda, what we are going to be telling you, starting with a brief introduction and finally taking you through to the question and answer session. As you all know, we have been licensed by under the Banking Regulation Act. Our primary regulator is Central Bank of Oman, and we're licensed to carry on the business of a non-financial financial institution. And we almost provide a very comprehensive suite of financial products, both on that long, medium, and short-term end of the market. We both have a substantial retail as well as a large corporate portfolio. The company was formed with the initial capital of 3 million, and the 60% of the capital came from the shareholders of Bank Muscat, and 40% we went public as required by the Companies Commercial Act of Oman. And we are very fortunate that our initial public offer was oversubscribed by 4,300% or 43 times. Having said that, we have a very esteemed board of directors here. We have been very fortunate that they have been with us almost for the entire life of this company. Our board is headed by eminent Sheikh Khalid Al-Wahibi, who has been the chairman almost since the inception. And then we have Sheikh Khalid Al-Mashni, who also is in the board of several financial institutions, including Bank Muscat. And then we have Sheikh Zaki Hassan Al-Nasib, who is also the chairman of the audit committee, who brings a lot of his experience. And then we have Mr. Nabil Al-Mahrouki, who represents who is an independent director and who brings with him a lot of experience in investment, as well as in management. And then we have Mr. Ibrahim Al-Wahibi, who has been a long-standing member and with the company for more than 2 decades. Similarly, we have Sheikh Tariq Al-Mashni and Mr. Shikhar Dharamsi. It was not on. It was on. No? Do you need to start all again?
Just press. Okay. It was on.
Now it's on.
Just hit
Okay. So we have a very experienced team of management. Gentlemen, I'm Aftab Patel, the CEO of this company. I have a very eminent team here with me. Let me just briefly introduce Mr. Chandrasekhar. He's our Chief Financial Officer, been with the company for over 2 decades.
How are you?
He also looks after the compliance. Mr. Ram Kumar is a Chief Manager Retail.
Hi, good afternoon. Welcome to the presentation.
Mr. Viju, Head of our Corporate Finance.
Good afternoon.
And then we have Mr. Manish, Head of our IT. Also, each one of them have more than 20 years of experience with Kenya. And then, of course, we have Mr. Douglas Chandrasekhar, the Board Secretary. Okay. Okay, go to the next slide. All right, this is our team here. Maybe the combined experience of more than 100 years. All right, then getting into a little more details, gentlemen, The Alumania offers a very wide and gamut of products and services, which entire range of corporate, retail, financial services. We're both into corporates, large corporates, medium, small corporates. We do retail loan, car financing. We also do hire purchase consumer loans. And most of our assets we are almost about 65% into corporate. The balance is the retail segment, which is again the car loans as well as the hire purchase consumer durable loans. Now, what do we bring to the market? What do we bring to this market? What is the unique selling proposition of Alumania? We have been in this market for a good 3 decades. Every year has been a very eventful and successful year for all our stakeholders. We bring to you strong fundamentals, which is very apparent from our financials. Our clientele base is now in excess of 100,000 clients. And we also have the unique distinction of having paid the dividend in every single year of our existence. We have a extremely more than required provision coverage, lowest NPLs in the segment, including the banks. So our capital adequacy is very high, about 35%. Robust capital structure, very sufficient amount of liquidity, almost 85-90 million Omani riyals we have in liquid assets, which allows us to capitalize on the opportunities as may arise, as well as leverage our borrowing cost. Now, with this slide, gentlemen, you see, starting with 1998, our first year of operations, till 2025, for every single year, if you see, we were successful, and we were privileged to have paid a dividend, and not only a dividend, a cash dividend every single year. So a majority of the years we have paid 25%, 20% dividend. And currently our total dividend payout since inception is 521.868%, which probably is a record for our sector in the country. We'll take you briefly now to the overall fiscal situation to give you a broad idea of the environment under which we operate, the broad macro fiscal situation. As you see, we have fared much better at the end of Q1 in 2026. Our deficit has come down to just about 25 million. Our revenue has been almost 3 billion. Spending is a little over 3 billion. First quarter, the oil prices ranged about 64, and then thereafter, the total geopolitical situation. In the last quarter now, for which figures are yet to be released, I think average oil prices have been much higher. So overall, we see a very strong fiscal position of the country. Hopefully we'll have a surplus budget this year again. The social and the infrastructure spending is online. Our inflation is under control. Our financial institution, as well as the country's rating, has been enhanced. There has been tremendous appetite for Omani debt, both at the corporate level as well as the sovereign level. We have seen tremendous responses for the issues that have been made. The borrowing costs probably at the in line or lowest with what you see in the region. So I think excepting for the a little bit of uncertainty that is you all know, I foresee that Oman should relatively perform very well, we remain very stable, and provide a reasonable amount of growth in spite of the geopolitical situation that we see in the region. Gentlemen, now we'll take you briefly through our performance for the last 5 years, 2021 to 2025. If you see our income has been reasonably consistent. We have, this is for the whole year, right?
Yeah.
Okay. So our net income has been in the range of about 10 million, about $25 million. Operating expenses have slightly moved up in the last 2 years. We have done a lot of, training and upscaling. We have added a lot of new talent in various fields. And as a result of that, if you see that we have remained consistent in delivering the results, yes, our hallmark has been very consistent growth and maintainable and sustainable growth. That's what we have demonstrated in the last 30 years, and we'll continue to follow that policy of sustained growth, and sustainability will be one of our very prime objectives. Now, our total assets have hovered around 200 million, approximately about $500 million. And net worth is around 70 million Omani riyals. If you see the earning per share hovering around 2025, 12.5%. Debt equity, yes, very low. And you can see the provision non-performing loan as a percentage of our total assets is just under 3%, 2.5%. Probably, as you know, that this will be probably one of the lowest in the country here as well as in the region we estimate. Now, our provisions have been very robust. We believe that lending business is fraught with risk and uncertainty. We continue to maintain our robust provision for including for unforeseeable credit losses that could emerge, uncertainties that could come in. Any lending business remains invested into the client's business for several decades. It's not that you lend today and the story ends tomorrow. It doesn't. And as a result of which, we have been served very well with keeping a large provision. Last year, our dividend was 16%. 2024 was 14%. So in the last 5 years, 12, 12 and a quarter, 13 quarter, 14 and 16. Hopefully, our performance will be marginally better in 2026. So I'm sure, barring unforeseen circumstances, we should be able to look at some steady earnings and performances. Income statement. This is for the comparison for the first half year of 2026 against the similar results for 2025 first half. And here, 2026 and 25, we have seen a marginal growth here. Income has moved up. Our interest expense is marginally down, as a result of which the net finance income is up by about 5%. As per the conservative IFRS model that we follow, we were required to reverse this provision. It was, with a limit to how much we can have. As a result of which, we achieved 2,072,000 as profit for the first half. After making a tax provision, our profit is 1.76 million, which will give us an EPS of into 2, which gives an annualized EPS of about 11.2. If you look at the balance sheet for the first half year, we have had a marginal growth in our assets from 134 million in June last year to 139.3 million in the June of this year. Provisions have remained steady at 13 million. That's because of the reversal of the interest suspense that was not required. Net receivables are grown by about 6%. We continue to focus on prime and prime plus business. Quality is something that we draw a line and say, this is what we want. The deposits with commercial banks are steady at around 85 million Omani riyals. Rest of the numbers are similar. So our total assets are 213,670,000 against 206 million of the year 2000, first half of the year 2025. Now, as we see, it has been our endeavor to maintain a very balanced asset liability mismatch. We do not believe, in spite of the deposits that we have very minimal mismatch, and therefore we do not see any significant impact on account of any changes that might arise as a result of any mismatch that may be there. So our deposits are about 4 million. Bank borrowings are steady, reflecting the change reflects the increase in the asset size. Trade and other liabilities are around a similar figure. Unsecured compulsory bonds of 4.2 million. This is including the bond that was issued as dividend in the year for 2025. As a result of which, this bond is 4.2 million, represents bonus bonds, free bonus bonds issued to the shareholders. Similarly, this unsecured non-convertible bonds, redeemable bonus bonds of 4.5 million. This also were issued in the previous 2 years as dividend to the shareholders. So this combined, comes to about 8.7, about 9 million. One of these bonds will be converted into shares in the year 2027, and one unsecured convertible bond will be up for maturity in 2027, which will be redeemed as per the terms on the due date. So this is our liability side here. Equity has remained constant. Our paid up capital is about 31.5 million. The minimum paid up capital required is about 25. Over the years that we have, the bonus shares that we have issued, our capital is now 31.5. We have reached the maximum requirement for legal reserve, which is 1/3 of the capital at 10.5 million. There's a small share premium account. Cash flow hedge represents our cover for the foreign currency borrowing of from 50 million to $55 million. Yes. And special reserve, we have created about 5 million as a matter of abundant precaution, so that in every unforeseen, very unique circumstances also, we should be in a position to manage those things. Retained earnings are 15.5 million, giving us a total equity without taking the convertible bonds as 63.7 million. For regulatory purposes, if you add for about 4.5 million of convertible bonds, the capital comes to about 68.03 million. Here are some ratios for you to have a look at. Our yield on the assets, average yield is pretty steady at around 7.7%. Our interest cost has come down this year from 5 to 4.4. So we have a healthy margin of about 3.5%. Our NPLs are about 4.4 million. This includes one of the corporate which went into liquidation, which will be resolved this year. And NPLs as a percentage of assets have come down from 3.55 to 3.8. 0.22%. NPL coverage stands currently at 404%. And this is the stage 1 classification. Stage 1 normally means that there is nothing overdue, performing very well. Stage 2 and stage 3, where our amounts to 19 million. So we'll take you briefly to what we believe, how the year will probably pan out for us, the year 2026. We are reasonably satisfied under the current circumstances with what we have achieved in the first 6 months of the year 2026. Our results were satisfactory for the month of July, and we believe the third quarter results will also be in line with what we have projected. We don't anticipate any significant impact on the Omani fiscal budget. We expect there will be a budget surplus this year, and our ratings will probably improve further. They're already investment grade, and we believe that the ratings will further. So we don't anticipate any issues with the sovereign raising of capital as well as the corporate raising of capital. I think we believe there's a tremendous appetite from what we have seen in the previous few issues by the banks. So the banking liquidity is more than adequate. We haven't seen any distress anywhere. Banks have been very, very willing, partners willing to lend if we need. So the liquidity position for the company and the system remains extremely well. We are on a good wicket here. Our capital structure is good. Our provisions are more than adequate. We have a reasonably large cash reserves. So if we believe or if we can foresee any opportunity, we have the immediate ability, both financial and other resources, to capitalize on that. So our only issue is that we will continue to look for prime and prime plus credit. Now, gentlemen, I think we have finished a bit early, and if I suggest that Penny, we're happy to take your questions. Kindly identify yourself, your name and your organization, and then you can state your question. Thank you very much. Is everybody able to hear me? Yes, go ahead.
Good afternoon, Mr. Aftab. Thank you for the presentation and thank you for entertaining our questions. Sir, my question pertains to the size of your loan book. We had seen some increases during the first quarter of this year, and then now during the second quarter, we have again seen a decline in the total loan book. So what is the strategy going forward? Because we have seen some huge increases in the books of even bigger banks with an even bigger base. So if banks are able to expand at that at those levels, and other FLCs are also expanding among similar lines. So what's the strategy with your company, and how do you see the future of your loan book growth? Thank you.
Thank you, Jay. I mean, that's a question that I think it gets posed to us a lot of times. It's not right on my part to comment either on my colleague, the sister companies in the sector, what their strategy is, or as well as the banks. We have a vision for ourselves. we have the conviction, we believe what we need to do. We are aligned on this with our shareholders as well as the board. And therefore, our policy is that we don't lack resources. What we are saying is that we will only solicit prime plus customers. We will not go for anything below prime. We have the ability, our cost of funds is low, and we have the ability to compete, and therefore, above all, what really happens is that even we have structured our business model in a manner that even if we do not lend, we really don't lose because we have the ability to leverage our funds. Yes, we have a lot of funds, but those funds really, there's no negative cost on those funds, right? I would rather sit with my money than lend where you have to provide. Now, without taking any names, Mr. Shaur, you would have seen, we didn't want to make that presentation here of the comparison, but if you see, what is the average provision cover that you see? I mean, in many of this, we have seen provision cover, uncovered provisions, uncovered NPLs in excess of 50 million for some of the companies, which means that, literally speaking, and I also have noticed that almost 80% of the gross profit now is the provisioning. So, you know what? The moment you go subprime, it is a never-ending cycle. It's a vicious cycle that you cannot exit. There was a time we were one of the largest, right? Whenever we see the opportunity, we will continue. But above all, what we will do is that we will ensure that we still make a reasonable profit and reward our shareholders with a dividend. We in the sector as well as in the banking sector, if you look at the last 5 years, without going back too much, we are one of the large dividend payers. 2025, our dividend was second highest in the sector. So I wouldn't be complaining at all, but that's our strategy. And that's how we define what we would like to do.
Yes, appreciate obviously your strategy, and you're right. Credit where credit's due. Your book is very healthy, and you have a very very big cover. Um, if you allow me, I would like to ask a follow-up question on that. So, obviously,
Yes.
how's the market looking in your prime segment? So, because please correct me if I'm wrong, but the leasing industry deals by definition with the clients that the banks do not or cannot entertain, and that is why they charge a premium on their services, on their loans. So how is the market, that obviously now in that segment, obviously there's a prime market and there's a subprime market in the leasing sector as well. So how is your market? And if you are if you follow your strategy, which is perfectly fine, but how do you see growth remaining within your strategy? I mean, how big is the market?
Actually, you know what? The market size, has been, if you look at the leasing market, basically the vehicles, it has now got substantially because you have some of the dealers who do their own financing, and they probably pick up at the very much at the bottom of the segment. What everyone has refused, the dealer might still want to sell and do the financing himself. Then, with the disruption that has happened in the automobile market, the market is not what it was 10 years ago. 10 years ago, you had 4 or 5 identified dealers whom would you go to one of them and pick up the car. You precisely knew who was distributor for these vehicles. Today, there are 145 Chinese brands, right? Whole market is segment. If you ask a lot of people who is the dealer for this car, most of them may not even know, right? And then what has also happened, we have seen that even a substantial part of the cars now sold, and this has been a very, very definite change and a trend that I have seen, we have noticed, is that used cars or pre-owned cars are now form also a very large portion of the total financed cars. Therefore, what is happening now is that the uh, asset backup is not as robust as it used to be about just about 5 to 10 years ago. Today, you go in the market, I mean, you can find money for a old car for 10 years, right? So literally, though it looks like a car loan, it is almost an unsecured loan. We do not have that policy. Now, what we have really done with our strategy, as I call it, we have flipped it on the head. We have this, there is a belief, or there is a lot of worldwide, that the finance companies or the building societies in the Western world are will lend one or two notches below the banking, and therefore we normally deal with the subprime or prime minus. But that's exactly how we are opposite. We have brought a lot of value to our offerings in terms of service, in terms of pricing, in terms of speed and delivery, in terms of what we offer on an analytical front to our corporate customers. As a result of which, we continue to attract very, what do you call, prime and prime plus customers. Like in the individual sector, we will normally have customers who would probably be coming with a larger income, higher salaries, low indebtedness, right? These are the kind of customers who still attracted. The fact that we still continue to write business. So on the retail segment, we have not really, kind of surrendered. And second thing that has really happened in this market is that, what now, a lot of this now, car financing, etc., has become more and more what you call determined by incentives that are paid, etc., which as a policy also, we like to say, yes, our customers are, high net worth customers. Our customers are senior personnel in the institutions, and they would like to deal with us directly. And we've been able to maintain that loyalty year on year. Now, if you look at the corporate side, right? Now, in the corporate side, we have customers who have been with the company for 20 years, 25 years, 30 years. So our business is a lot of repeat business. People who prefer to deal with us because we bring value to them. We bring transparency to them. We bring to them the pricing advantage. We bring to them this advantage of speed. Now, these are the things that customers appreciate. For example, you don't go and buy a cheapest television, right? You don't admit your child to the cheapest school. So pricing is not necessarily a big determinant. A lot of determinant is on what kind of value you can provide. You see, our customers on the corporate side are very large family businesses, large listed companies, very large SMEs, and we are, as a finance company, these customers deal with the banks and Alumania. So this is how uniquely structured we have. This is the kind of brand pull that we have, right? We don't really, the moment you go subprime, the first thing that happens is your cost of borrowing goes up, right? If you do an analysis, sure, you will see that Alumania cost of funds is the lowest in this industry. Now, if you go subprime, sooner or later, your cost of borrowing goes up. Your cost of borrowing goes up, you need higher yields. You need higher yields, you've got to accept low credit. And that's the natural corollary, right? You cannot redefine what it is. You want higher yields, you go lower down on the credit criteria. And then it becomes a vicious cycle. Then because you're going low down, you have more default. As a result of more default, your cost of borrowing goes up further, and then you need to lend at a higher rate, and so on. There's really no exit. In the sector, in Oman, I'm sure you have seen companies who have fallen into this trap and then taken a decade to recover. How many of these companies have skipped dividend in the last 1 decade? Right? So what I'm saying is that we are on a sound wicket. We are a boutique finance house, right? And we'll maintain and continue to have that strategy in place. Okay.
Yes, perfect. Thank you for the answer. And yes, I agree with you. Obviously, we have analyzed the numbers, and Alumania has the both the lowest cost of funds. My next question is regarding your payout policy. So, during a couple of years back, you had announced redeemable bonds in addition to the normal, cash dividend that Alumania pays. And then for the last 3 to 4 years, we are again seeing convertible bonds. Now, as an investor, as an analyst, we would always prefer a redeemable bond because a convertible bond is a stock dividend at the end that that doesn't actually pays anything because your number of shares go up, but then your holding also dilutes by the same amount. So it's a zero sum game. Whereas a redeemable bond gets you cash by the maturity period, which obviously uh, I can be certain and add to the dividend yield. So is the management
I,
considering something on that front? And
you know what, dividend policy, one thing is we what policy you would like to have, and we have a policy in place. But substantially, dividend policy will be determined and payment of determined by what the regulators finally approve, right? Uh, if you see, we had three issues: 22, 24, and 25, where we issued non-convertible bonds. And like now, one bond is going to mature in next year. We actually there will be cash payout, but technically it's like a deferred cash dividend, right? We understand that. We understand because our shareholders' preference, investors' preference too. But you know, substantially we'll have to govern by finally what the regulators approve. So I think so. We will pursue a policy of a cash dividend and a dividend paid out in bonds or shares, whatever our board of directors approve, and finally whatever is approved by our regulators. But I understand your point from from where it's come. Yeah,
perfect, perfect. Thank you for your time.
you're welcome. I see a lot of attendees here. Gentlemen, please feel free to raise any questions, any queries, any doubts. We are here and we'd be delighted to provide you with the answers. Gentlemen, the forum is still open, and please, if you have any questions, kindly go ahead. Gentlemen, if you don't, okay, gentlemen, thank you very much for joining in and for the question answer session and listening to us patiently. If you do not have any further questions, we will close this session. Thank you very much.